indexy. So let me address that quick. The US dollar, the Dixie, doesn't respect structure in the market as, for example, gold or Bitcoin or Euro USD. It doesn't respect it in the same way. Then you might ask, like, okay, but Jay, look, you pull this trend line and this channel here. What is it that it doesn't respect? Yeah, well, the thing is like this. The trend lines are very good just to find direction in the market. I understand that the trend up here is up, and that's very good. That's what a trend line actually is for. But you cannot count on the US dollar coming down here and it's going to respect it perfectly like it actually did here. Why is that? Because the US dollar, the Dixie, is so dependent on fundamental factors. So when we chart up Euro USD, when we chart up gold or Bitcoin, and we're looking at the technicals will play out about 80%. Like 80% of our analysis should be technicals, and 20%, about 20 to 30% fundamentals. When it comes to Dixie, the US dollar, I would say about 60% fundamental, 40% technical. So this doesn't weigh as strong as if this would have been a Euro USD that we're looking for, a structure at Euro USD or something like that. Still though, it's nice to find these structures to understand in what direction the market is moving. And right now what we have, when we're zooming in again to the structure is, sorry, I have to skip back. So what does the US dollar respect if it doesn't respect structure? It respects supply, demand, volume. All right, supply, demand, volume on the technical chart, and of course fundamentals as mentioned. So you always want to look for the supply and the demand zone. That is very important when we're looking at Euro USD. Sorry, at Dixie and Fibonacci. But of course, we use Fibonacci to find supply and demand. Why is Fibonacci is the same thing? Because people see those levels and they respect them and they use them to buy and sell US dollar, to hold US dollar or to sell off their US dollar positions. So let's do like this, so we can see this a little bit clearer. Let's do like this. Let's remove this and this. All right, cool. So look at the Dixie. I'm pulling fib from here to here. So this whole sequence, right? What has it done? It has come up. This is the top. Has retraced, come into the sweet spot zone, picked up supply, came up, respected the 38.2 Fibonacci retracement perfectly. Came back down, back up again, respected the 23.6 Fibonacci retracement perfectly, like spot on, and it's now down and testing the 50% level, okay? But it's the 50% level from this swing. So it's not the most recent swing. The most recent swing is this swing here, all right? The most recent swing is actually this one. We have a top here. But the most recent completed swing is this one. So market is back down, testing the 50% Fibonacci retracement, which is the sweet spot zone. It's testing it, and I actually think the thing is here, we have a lot of liquidity here, and now we want to see Dixie come down at least halfway in to this zone before it moving back upwards, or if it wants to continue down. With the situation we got now with the banks, we might see the US dollar drop, but we don't know. And of course, as we know, the US dollar affects gold, Euro USD a lot. Bitcoin not as much, but Bitcoin as well. So if this thing starts to drop or come into the sweet spot zone, we will see gold moving up from here, Euro USD moving up from here. If it doesn't,